Welcome back. You're watching Midcap Radar on CNBC-TV18. Let's now talk about EMS. Q3 was a good quarter for the company. Revenue saw 32% growth on a year-on-year basis, while net profit also surged, although margins contracted on a year-on-year basis. Ashish Tomar, the founder and MD of EMS, joins us now. Good afternoon, sir. Thank you so much for joining us here. First of all, take us through, what exactly transpired in Q3. On a year-on-year basis, both revenues, margins, and even the bottom line surged quite significantly. But sequentially, it appears as though execution has slipped a little bit. So what exactly transpired in Q3 and what's the outlook for Q4?
Yeah, good afternoon and thank you. So our income from operations saw an increase of around 30%, and profit before margins were around 21.08%, and PAT remained around 24.05%. Yeah.
Ashish, we have these numbers, of course, but we're asking for some finer details in terms of the order book. Thanks for joining us, by the way. We just want to know what is the construction portion, what is the O&M portion, and what kind of revenue visibility does that really give you now?
Yeah, around 90% of the income was from the construction portion, and around 10% is from the O&M part. And we also received few orders in this quarter, amounting to around in excess of around 500 crores or so.
Okay. Can you give us the absolute number as to where exactly the order book stands at currently? That's the first question. The second question is, for the rest of FY24, basically we're talking about Q4, which are the orders in which you are L1 in? So current order book status, and where do you expect to close Q4 in terms of the order book?
Yes. So as of now, our unexecuted order book stands at around 1835 crores. That's 1835 crores. This also includes two works in which we have been declared L1, costing around 500 crores.
Okay, so around 1835 crores is where your order book stands. Could you just take us through what the execution timeline is? I'm trying to understand, when they are going to reflect in your revenues.
Yeah, the majority, I think around 70 to 80% of the work has to be completed in next 2 years. So I think we should be able to execute around 1,500 or 1,600 crores of work in next 2 years out of the current work in hand projects.
Okay, now we want a sense of the order pipeline. So Q4, has there been a certain sense of slowdown in terms of ordering activity? In a couple of months, we'll also see the election code of conduct coming into place. So post that, do you expect some slowdown as far as ordering is concerned? And which are the orders, or what is the quantum of orders where you are L1 in currently?
Currently, we are L1 in 2 projects. One is a project for development of water supply and sewerage system in Vikasnagar, that is nearby in Dehradun. The cost of that project is 478 crores. And another is a small building work in Meerut, whose cost is around 40 crores. And as far as future works are concerned, I think we have bid for projects worth around 4,000 crores. And we expect results to be declared in the coming month. In anticipation of the declaration of code of conduct, I think the project shall be declared before the inception of code of conduct.
Okay. A couple of very quick questions. You had told us earlier that you bid for a project in Jharkhand and one in West Bengal. What happened with that? Have you got those tenders?
Results of those projects has not yet been declared. But we hope that those shall be declared in the coming month.
Okay, got that. Another very quick question on the margin, because that has come off quite significantly. If I look at it for this quarter, it's at around 23%. What you'd managed to do last year was around 28%. Why this hit, and what is the sustainable margin going forward? Is it going to get back to that 28% kind of level?
Ma'am, I think if we see the results for 9 months, I think the results will remain similar. The profit margin for previous year was around 22%, and for the same 9-month timeline, this year it has been around 21.34%. So I think overall,
if I look at your company's, margins for FY21, FY22, FY23, it's always been in around a 28 to 31% band. You're saying you can't get to that now?
No, I'm saying that is for profit after tax, not profit before. Profit before tax is...
I'm talking about the EBITDA margin.
Yeah.
Where will the EBITDA margin be? Because you have done 28 to 30% regularly, but now it seems to have come off quite a bit. That's why I'm asking you.
No, the EBITDA is, I think, in the similar 28% range.
Maybe you're taking into account the other income as well. I want to ask you another question. What we want to understand is, when you spoke to us in September last, you spoke to us and told us that the order book was a little over 2,000 crore. Now, post-execution, it's now standing at a little over 1,800 crore. So there seems to be a significant execution, number one, that's happened. But also, given the fact that the order book has reduced, revenue visibility also has cooled off a little bit. So, it's now important that order wins come in quickly. So what is the order visibility like, and which are the other orders that you can expect to at least participate in, especially given the overhang of the election code of conduct?
I think in this month alone, we are looking to participate in projects worth around 2,000 crores. And out of the projects that we have bid for, I think currently, which stands at 4,000 crore, we hope to convert these into orders. I think a significant part of that portion.
Thank you so much for your time. Thank you for giving us all of those details. But now we have to slip into a short break. On the other side, we will bring you our exclusive conversation with the management of ZF Group India on their new plant opening. Stay tuned.